Good morning, everybody, and welcome to the September 20th, now September 21st, Tucson Mortgage Weekly. I appreciate you tuning in. For those of you that enjoyed the Jewish holiday of Yom Kippur, I wish you a very happy and a healthy New Year. And now let's all get back to work. Okay, what's going on? Last week was actually a very volatile week. What we ended up with is, first of all, a retail sales report came out earlier in the week showing that the results were better than everyone was expecting, and that really sent some optimism through the business world. There was also some speculation that the Feds might jump back in because of the overall continuation of the softening of the economy and buy up to $1 trillion, I keep having trouble saying that, $1 trillion of assets, just like they did before. Now that was just pure speculation, but that clearly sent the markets on a bit of a wild ride. It's funny because as all those rumors were coming out, Greenspan was quoted as saying that government stimulus packages don't work. So there was a bit of a dichotomy there. Some sobering news later in the week relative to the economy pushed rates higher. And by Friday, the volatility just kicked in to the point where people just had nosebleeds. A lot of folks were leaving early for the holidays. And, you know, although we ended okay in the week, the damage had already been done. I think headaches and shaken brain syndrome was prevalent all over Wall Street. What's going on today, which is Tuesday? Actually, the big news is that the Feds are releasing their interest rate and policy statement at 12:15 Eastern, which is 11:15 here in Tucson. And as before, the wording is going to be key. Right now, what they're looking for is comments regarding things like quantitative easing. Is the Fed going to jump in and actually do what they can to push rates down further? Now, they're already low. I mean, for example, is someone going to suddenly buy a house because mortgage rates are 3% rather than 4.5%? I don't think so. You got to have a job, folks, okay? It's the economy, stupid. Got to have a job. All right, so maybe Obama heard that, or the folks in Congress will hear that. Nonetheless, they're still contemplating seeing what they can do to lower rates. Now, the thing is that the expectation is that they may announce some quantitative easing, and what that would do is that would, in fact, push rates lower. So keep your eyes open for the wording of the statement today. That's going to be very important. This week, volatility continues. There's not many key reports coming out, and I think the response and the digesting of what the Feds do with the announcement today will affect stocks, and with stocks go rates. So watch the stock market closely. Anyway, if you have questions, give us a call. Todd Abelson here at Sun Street Mortgage. Don't forget to check the blog site, TucsonMortgageBlog.com. Thank you very much for your cards and emails. Make it a great day. Bye-bye.